Hey, what is up, investors? Jason here. So in this video, this is a second part. This is the more technical analysis part to the ARKK Innovation ETF, ticker symbol ARKK. As you guys know, Michael Burry and other hedge funds have made bets against this ETF. And what I want to do in this video is I really want to go into it, look at the ETF, look at the stocks that are within inside of it, and look at some of the forecasts of some of the top holdings as well, and just kind of do my own personal opinion, talking about, you know, where they're probably getting some of their ideas, where some people are thinking that this ETF could really be. Just doing some simple, you know, math and drawing some lines on the graph, you can pretty much get an idea if you follow the trends of where the ETF could have been if you're kind of just being really simplistic and not really thinking too much about the things that have gone on and the catalysts that have been put in place with the pandemic and the way that has really changed the way that companies do business. And that's kind of what I'm doing in this video, is I'm kind of putting all that together and taking into consideration everything that has changed in the market, and with the way that companies are doing business and the way that growth stocks are now and the way that valuations are, and kind of taking all that and throwing it in this video. This video could be a little too technical for some people, so I hope that it makes sense for you guys. So as we get to it, if you guys don't mind, please do me a huge favor. Please be sure to smash, destroy, annihilate, or just simply press that like button. Helps me out a lot with the YouTube algorithm, helps spread this video to more people that might find it interesting. And subscribe if you have not already. And if you are interested in being a Patreon, help us support this channel even more, you can talk to me there. I have a Discord that I do make available to the Patreons. The link is in the description. Thank you to all the Patreons. Now let's get to it. So looking at ARKK's Innovation ETF, ticker symbol ARKK, from the last 5 years, you can see how much of an amazing run this ETF has had. Now, looking at where it was at, 5 years ago, this ETF wasn't really valued at much money at all in comparison to where it's at right now. But a lot of this momentum that's really happened here started in 2020, and pretty much in the first quarter of 2020, I should even say. So when the pandemic sent things going all crazy in the market, and we saw many stocks drop down in price, we saw this happen with this one. So this one had taken a pretty big dip back from February into March, and then in March, what had happened? Many stocks, we started seeing that they went on just an amazing rally, and the same thing happened for this one as well. What we ended up seeing was that Tesla and many other companies like EV stocks and such really started to take off during this time. Just things started to really accelerate. I was an investor in Tesla during this time, and I couldn't believe what was going on because my Tesla shares were valued so low just before this, and then all of a sudden my Tesla shares just started skyrocketing. And what we saw with this ETF, and we can thank a lot of this to Tesla really, what we saw is that we saw the price of this just keep going and going and going. And just like many of these growth stocks, many of them in the tech industry, we saw a lot of them really start seeing a lot of pullback at the end of February, going into March. We have so many stocks that we follow on this channel that the same thing had happened, that they had taken a pretty big dip during this time. From February into March, we saw a lot of stocks have the same sort of problem. And that's what really happened to this ETF, because a lot of stocks that I follow in general are in this ETF. Now, looking at the holdings within this ETF and getting an idea of what is all inside of it, and keep in mind that this is an actively managed ETF. That's what makes it so interesting, is that Cathie Woods and her team there, they do actively manage the holdings within here. They buy and sell. They add new ones. It's a very interesting thing that there's always something different about it. It's never the same usually one day to the next. There's always something that is trimmed or added, or whatever they pretty much can do there. So looking at what is the largest holding, what has been the largest holding within this ETF for a long time, is Tesla, and Tesla makes up more than 10% of it. Looking at what the second one is Teladoc, which makes up more than 5.5%. Roku makes up more than 5.5%. Coinbase, which we know Coinbase hasn't been in here that long because Coinbase hasn't been a publicly traded company for too long. And Coinbase makes up almost 5% in here. And we have a lot of other companies in this that have really boomed during the pandemic. Stocks like Teladoc, being able to have someone contact a physician and be able to get a diagnosis without having to go anywhere, just doing it right over the phone. Stocks like Roku, the streaming service with people being home and nothing to do, that stock, big catalyst was the pandemic. So a lot of these, the pandemic was a giant catalyst for them to really see their companies do well. It's like Zoom, for instance. People stayed in contact using Zoom, and they stayed, with their work and stayed communication with their coworkers and customers and having meetings and things like that. Zoom was really beneficial, especially also for like college students and even grade school kids and stuff like that. Zoom was one that really had a lot of catalysts with the pandemic being there, and the company did very well because of it. And even stocks like Square, transactions without handling cash, and people weren't going to the store. They didn't have any cash on hand really, and doing transactions over their device. And then, of course, Square getting into crypto and things like that. That was another big catalyst. Shopify, people wanted to make money. People needed something they do at home. So starting a home business, Shopify, a big catalyst was the pandemic. And going into these other stocks like Spotify, people watching things like Joe Rogan and, keeping up with their podcasts and keeping up with music and just having some sort of entertainment. Big catalyst. And then ones that had gone public during that time, like Palantir and Coinbase and etc. Many of these companies had a lot going for them. And then especially looking at how like the real estate market with Zillow. So a lot of the stocks that are in this ETF had so many beneficial factors that were pandemic related and still are pandemic related, like DocuSign, DraftKings, with DraftKings doing the pretty much betting on just about anything that, they really took their business in different directions to help produce revenues and such. So many things in here had a lot of catalysts that were pandemic related. And that is something to really keep in mind. But at the same time, we saw a lot of innovation happen during that time. We saw a lot of things that made more sense on how to run a business, and people starting to, get the idea that they're going to take their business anywhere they want. And that's one thing that we do have to keep in mind with looking at these stocks, that a lot of the catalysts might still be there to stay for a very long time after life gets back to normal, whatever normal will be. And if you aren't somebody that likes to invest into something like this that deals with, innovation and growth stocks and something that's a bit of a risky investment, then of course ARK Invest ARKK wouldn't be a ETF to buy. Buying something more secured like a S&P index fund, something from Vanguard would be ideal for somebody that doesn't want to do something like that. But for the people that do like, growth stocks and tech stocks and innovation, this has been a really good ETF for that. So now I want to do some outside of the box thinking. I'm sorry if this isn't something that you guys are used to, and hopefully you guys can keep up with this. And my brain works in a very funny way. I got Asperger's, so I'm sorry if this is going to be hard to understand. But what we're looking at here is we're seeing this graph in the last 5 years. And what I did here was I took the white line here, and I'm showing you guys what the trend has been from the lowest point of August of 2016 to the highest point of February of 2020. So going into where the pandemic had really dropped the market, messed everything up at that time. So this is the trend line here, what we're seeing. Now this line, this yellow line, I'll get to this purple line here in a second. This yellow line represents the lowest point of where the ETF was in March of 2020 when the stock started its bull run, to the highest point that it was when the bull run pretty much ended for it. At this time, February of 2021. So looking at the trajectory that it was on during that time, you guys get a good idea, seeing how it went from a price of about $33 to the price of about $159 or about $160. So that was a pretty big aggressive move that it went on. If we were going to base this off of the averages, though, of where the ETF would be now in comparison to the way that it was moving beforehand, we could say that the ETF could be valued at a price of around, $75 or $80 a share. But at the same time, keep in mind that it is an actively managed ETF, and there were a lot of catalysts that did help send the stock up. So right here, this line would represent, if we were to keep the same movements in the stock, for another year, this is where we'd kind of be at about $75, $76, somewhere between $75 and $80 for the most part. is what I would think. If they were to just keep investing in the Tesla the same way, if all these stocks would have gone the same way, if Tesla didn't explode during this time, and we didn't have the pandemic, and the market didn't go crazy. That's what I'm thinking. That's what I'm thinking we would have seen. If we were to just look at this, like, there would have been a simple correction and then it would have recorrected, but we didn't see any sort of natural movements in the market. We saw a lot of manipulation going on. We saw a lot of other things that were affecting it, and that's why that's why I can see why a lot of people would say, hey, this should be valued at a much lower price. And I would understand why the hedge funds would say that. But I'll be straight with you guys. I don't agree with that. I don't really agree with the hedge funds. I see that the price of ARKK could come down a little bit. I can see that it would be on this correction. That would make sense because nothing's going to just continue going up. It's going to correct before it starts moving again. And that's what I think is going on. I think that where we saw Tesla during this time to where we're seeing Tesla now, things have gone much different for Tesla. Tesla's in a much different situation. They've raised a lot more money. They've gotten more manufacturing done on their factories. They got more vehicles coming out. The whole direction that the auto industry is going is the direction that Tesla's already in. So if we're looking at a lot of this being Tesla that did this to ARKK, then it makes sense. It makes sense to what we're seeing. It makes sense that Tesla would be still doing really well for time to come. But it makes sense that there would be a correction. Same with Square. Looking at what the catalysts for Square are on going forward, they're great. The Roku, also the same thing. I think that Roku has so many catalysts to continue going forward here. I bought a Roku TV for the first time during the pandemic, and I love it. And it got a lot of people turned on to it and interested in it. And same with things like Teladoc. I used Teladoc over the pandemic. I liked it. I don't want to go to a doctor's office and sit in there for something that I don't need to do to get something diagnosed for something so simple and just go pick something up, get a prescription written, and just go pick it up at CVS or Walgreens or whatever. Life is simple in that way, and I think that's something that we're used to now, and I think we're all getting adapted to, and I think that that's the catalyst for everything pretty much in this ETF. The only thing that I would say that would be kind of risky going forward would be like things like real estate, which we know that it's an actively managed ETF. And we know that Cathie Woods would pretty much get rid of something like that when she saw that all the catalysts going forward in real estate and for Zillow and stuff like that. She'd probably more than likely sell out of that and use the money to buy something else that has a lot of momentum going into it. Now, for the most part, a lot of this has to do with Tesla. You know, what Michael Burry is doing, he's making up pretty much a bet against Tesla for the most part. That's what he's doing with ARKK, if you were really to think about it. And if we look at what the analysts are saying about Tesla, we know that there's some analysts that are bullish on Tesla. We know that there's analysts out there that are very bearish on Tesla. And looking at where they're at with here on CNN Money, between 33 analysts over a 12-month price projection, we have the low here at $67. We have the median at $764 and high at $1,591. But this low estimate, that's a pretty low estimate in my opinion. I wasn't even buying Tesla stock at that price, or I guess it would have been if we were counted before the stock split. But still, the company has gone so far since where it was previously, and I would think that to value it at that doesn't really make any sort of sense. I think that people are still trying to put too much fundamentals into the stocks and not really understanding that these growth stocks and these newer innovative tech stocks, they don't go off those same fundamentals that people used to go off before. So I would say that the median here for Tesla is more of an accurate statement in my opinion. And I think that we would see a little bit of growth with ARKK in the future, or not a whole lot, but I don't think it's going to drastically fall in any sort of way. And looking over at some of the other top holdings here like Teladoc, the analysts projecting that there's still some catalyst there. Even the low for Teladoc at $140, what the analysts are saying. That's between 25 different analysts. The median 185, high 291. A lot of potential there. Looking over at Roku, the low for Roku 310, the median 486, the high 650. So when we put it like that, I think that we're not going to see any sort of big issues with ARKK to come, like the hedge funds are predicting or are betting against. And I think that we might just see a little bit of a slow movements within the ETF maybe a little bit of a drop in the price, but all in all, for the most part, I'm personally more bullish because I really think that since it's so highly rated in these three stocks in particular, I think that there still is a lot of growth to come from these. And for everybody else in that ETF as well, I think that there's so many catalysts for them to look forward to. And I personally would not bet against it, but that's just my own opinion. Now, keep in mind, video is not financial advice, my own personal opinion, so please do take that in consideration. So as always, everybody, please like, share, comment, subscribe. I'd like to hear your opinions. I'll see you all in the next video coming very soon. Thank you for watching.